welcome back to the channel. As promised, this is going to be the strategy video. Before getting into the strategy, I want to discuss two important things. The first thing is I'm going to explain the strategy in detail. So if you guys don't have the time right now, click off the video, add it to your watch later list, or like the video, and you can watch it later when you have the time, because I'm going to explain every aspect of a strategy or trading. The second thing is I'm going to cover concepts like option selling, a call option, a put option. So in case you guys are not familiar with such terms, I've added few videos in the description so you can watch those videos, get a better idea of options, and then come back to this video. Other than that, assuming that you know what's options and what's call option, what's a put option, what's short selling, I'll get right into the video. Okay, let's get started. So for me, right, trading is basically consists of just three things. The first thing is the analysis. The second thing is the risk management. And the third thing is psychology. That's all is trading for me. If you master these three concepts in any strategy, you'll win, or you'll be at least in the market for a long time. So I'm going to explain one strategy and discuss all these points for that one strategy. So let's get started. Yeah, so let's move on to the analysis. Before moving on, we are going to trade in Bank Nifty. So just for letting you know, and our goal is to make 50% of our capital by the end of this year. It doesn't look like a lot, but I'll explain that in a bit, right? And maybe at the end of the video. So let's get started with the strategy. So we're going to discuss the analysis part, right? So what could analysis consist of? Okay, it could consist of the entry, maybe. It could consist of chart patterns, right? It could consist of maybe levels on the chart. It could consist of where the market's moving. So whether it's bullish or bearish. So all this could be the analysis part, right? So let's discuss each of these points, right? So when are we going to enter this strategy? So there's three times we are going to enter, and this is going to be a positional strategy, right? So we are going to enter in one of these times and exit during expiry. So when are we going to enter? We are going to enter on Monday after 12 p.m. based on your levels. So based on levels, or we're going to enter on so if these levels don't satisfy on Monday, we're going to enter on Tuesday, and we can enter any time of the day on Tuesday. If the levels don't satisfy on Tuesday also, we're going to enter on Wednesday before 12 o'clock. So before 12 o'clock, right? So this is our and all these are based on levels. So this is going to be our entry. Moving on to the chart pattern and levels, I'm going to show you how I decide whether a market's bullish or bearish based on chart patterns and levels. So let's get right into it. So here I have TradingView. Again, if you guys are not familiar with TradingView, I've added a video in the description and you guys can go check it out. So so before getting started, the first thing I do is remove all my drawings. I always like to have a clear chart and remove all the indicators. So let's see. So the market's always going to tell you a story, right? Let's try reading the story. So what I usually do is I go into the just a second. Yes, I go into the 1 day time frame, right? I go 3 Fridays back, so 3 Fridays back, and see the trend of the market, whether it's bullish or bearish. The next thing I do is I go to the 1 hour time frame and draw levels on the chart, or I decide the chart patterns too. The next thing is I enter my entry would be on the 5 minutes time frame or the 15-minute time frame. That's it. Okay, so let's see the trend of the market. So as I said, we'll go 3 Fridays back. So right now it's the last trading session was Wednesday. So let's go Friday. So this is the first Friday. This is the next Friday. This is the next Friday. So consider this. So we are going to do the analysis from for Monday. So consider that these 3 days are not there. So we just consider 2 Fridays. So let's go back one more Friday. So yes. So we're going to start our analysis on this date, right? So let's see where the what happened to the market, right? So right now we can see a slight bullish run on the market, and then on at this level the market fell really hard. It again took a pullback and fell more. It again took a pullback and now it's consolidating. Consider that we don't know these levels, right? So it's consolidating still, right? So this is what the market tells us. So I'm sure if you guys know the basics of chart patterns, um, here there was a bullish run, and at this level, at the all-time high, the market felt really bad, and then there was a pullback and it fell more, and then there's a pullback again here. So what could happen? If you guys heard of the term, I keep forgetting this. Is it higher lows? No, lower lows. Yeah, higher lows, right? So higher low is basically this. So there's a higher low here, there's a higher low here, there's a higher low here. So here we know that clearly a kid could tell us that the market's bearish, right? Guys, do we see something similar over here too? So the market was bullish, then there was a big fall, then there was a pullback, then there's a big fall again. Now there's a pullback and there might be a fall, right? So in my view, the market's bullish. So I'll just write it down here. The market's bullish. Sorry, the market's bearish. And it's totally acceptable if you don't agree with my view, but having a view is very important. So let's move on. So right now, the market's bearish, right? The next thing I do is I go to so I remove all the drawings again and I go to the 1 hour time frame. Here's where I draw important levels. So I use the box and you guys can use it too. So I think this is an important level for the market. So let's not consider the recent price action. Even if you see it like till Friday, which is here, it had multiple, it was a resistance here, it was a support here, it was a resistance here again, right? And another level could be this, right? Because you guys can see multiple supports taken here, and there was resistance here. Another level could be this, and here, right? And maybe one more level on the top over here somewhere. So these are my levels, right? So these are the levels I'm going to use till my trade exits, right? And so now what and all we know? We know that the market's bearish. Again, if you don't agree with me, it's completely okay, but have a view. Then I go to the 1 hour time frame and I draw levels, right? So let's get right back into the notebook. So yeah, right now we know that we are bearish on the market, right? That's point one. And the second thing is we drew levels. Now, that's basically the analysis. So we covered the entry, we covered the chart pattern, we covered the levels, and we know how whether we're bullish or bearish in the market. So our side is bearish. Moving on, risk management. So this is a very, very important topic, right? So I'm going to spend most of my time explaining, like talking about risk management and psychology. And I'll also explain the strategy here because it's similar. So let's go to the strategy, right? So what's our view? What's our view? Our view is bearish, right? What I'm going to do is I'm going to sell a call option, a far OTM call option, and I'm going to buy a further more OTM call option. What this means. So just a quick recap. If you in for option selling, if you're selling, so we know that if you buy a call option, we're thinking that the market's going to go up, right? So selling a call option is basically the opposite. We think the market's going to go down. And buying call option, like I said, we think that the market's going to go up. So it'll be something like this. We are going to sell this level of OTMCE, and we are going to buy this level for an OTMCE, right? I'll give you guys an example. So I mean, it looks very confusing here, but I'll go right into the chart and maybe give you an example, right? Okay. So right now we took a view that the market's bearish, right? So based on like, and also use your levels right now, right? So my theory could be that, so right now we're here, correct? Like the market's here. Our view is bearish. So maybe once the market pulls back a bit and starts falling down again, I'm going to short, so use your levels here, right? So I'm going to short a 43,600 CE, and I'm going to buy 300 to 500 points of the 43,600 OTM. So somewhere over here, I'll write that down. So what I'm going to do is, sorry, yeah. What I'm going to do is I'm going to short and something. Yeah, what I'm going to do is I'm going to short. So what I'm sorry. What I'm going to do is I'm going to short, what was my level again? 43,600 CE. And I'm going to buy 300 points to 500 points out of the money option. So what would be an out of the money option for a call? 300 points would be 43,900 CE. This is the strategy, right? So what I'm going to do is I'm going to, so 43,600 is over here somewhere, and 43,900 is somewhere here. So what we are basically doing is, imagine, I'll come back to the margin rules and prices and stuff, but imagine this price is at 100, right? And the buy price of this would be probably 50. The difference of this is going to be our profit. So if you take 25 quantities, it's going to be 25 into 50. So this is going to be our profit, right? And I'll talk about profit and loss and how we're going to manage it later on. So this is just theoretically, this is going to be our profit, right? What we're doing here is something interesting. We're basically predicting where the market won't go. We're not predicting where the market will go, like option buying. We need to predict where the market will go. Here, we're predicting where the market won't go. So if it just stays in your level, you make this money. Obviously, like during expiry, there's nothing for you to do. Even if the market like falls, or even if the market's sideways, or even if the market's like this, all these cases you're going to make money. Why? Because we sold options. So that's the only advantage of selling options. Even if the market rapidly falls, you're going to make money. Even if the market goes sideways, as long as it's below your level, we're going to make money, and we're going to make the full amount. But in option buying, on the other case, only if we have wide movements, we're going to make money. And that's very rare, right? So this is our strategy. I'll just quickly go to fires. I'm sure you guys would have heard of fires, and create a bunch of create a basket order. So I'll just create a basket order. So all these were my previous trade. I used this strategy literally yesterday, and this was my trade, but that's another topic. I'm sure I'll be doing live trading videos and showing you how to implement this strategy. So if you guys don't understand it right now, it's okay. So let's create a basket, right? Let's create a basket of 43,600, right? So what I'm going to do is I'm going to 43,600. So there's one more thing. Always execute the buy order first, and then execute the sell order for margin purposes. So always execute the buy order, which is 43,900. So add that in your basket first, and then execute the sell order. Also, if you guys are comfortable with fires, you could use fires, or you could use ZERODHA, whichever you're comfortable with. The link is in the description, so you guys can go open your accounts. So yeah, 43,900 CE, right? So we're going to invest always. We're going to carry forward the position till expiry. So add the quantities. The next thing would be so the next thing would be 43,600 CE, and this we're going to sell. So sell, invest, and add the quantities. So buying 43,900 CE on a normal order, and sell 43,600 CE in a normal order. Do you see here, guys? The margin is literally 30K. If you just sold options, so let's just write this down, right? In just 30K, you guys can literally sell options. If we remove the buy position or the hedged position, do you see the margin requirement here? It's 1,30,000. But if you buy the 300 to 500 points OTM option, we're going to execute this thing in 30K, right? Okay, now the analysis is done, the strategy is set. Now what we are going to do, the most important topics, the risk management and the psychology. So risk management, right? What I want you guys to do is, I don't want you guys to lose more than 2% of your capital, right? So you should not lose more than 2% of your capital in any trade. So yeah, I'll just come in detail with this. And whenever, if you're losing for 2%, you need to gain at least 4% of capital, right? So if your capital is 1 lakh, you're not going to lose more than 2,000. And if you win, you're going to win for 4,000, right? Um, so let's go a little bit in detail over here. And by the way, the strategy has a 60% win rate, right? So 60% of the time you're going to win. So let's go in detail over here. So a month has 4 trading sessions, correct? So we're going to calculate our all our outcomes and trade accordingly, right? So imagine, let's take the first week. We win, so we gain 4%, right? So we gain 4%, right? The next week, we again win, so which will keep our capital at 8%, right? Correct. So this is case one, which is the best case. And what's our goal? Remember, our goal is to earn 50% of our capital by the end of the year. No great returns, no scams like, okay, I'll give you 1,000% per month or anything. We want consistent profits, so that it basically boosts our self-confidence, right? That we have an ability which would give us money, right? So yeah, our goal is 50%. We win twice, we get 8% of our capital. I'm not going to trade any of the other sessions. I'm done. So just in 2 weeks, I gain my more than what I need. I just need 4 to 6% per month. So if you just multiply 4 to 6% into 12, you're going to get actually more than 50%. So that's the first scenario, which is the best case. The second scenario, here's the thing. If we lose the first trade, for example, we still have 2 more opportunities. So if we lose the first trade, we still can, for example, if we win the next trade, we'll be at 4%. And then if we win another trade after that, which is on the third week, we'll be at 4%, which will keep us at 6%, which is still in our target. So this is the average case. The worst case, right? We lose the first day. We have still 1 more chance because maybe we might win. But again, if we lose this day also, we are at a -4% loss for that month. If you guys follow this, you guys are sorted. You guys don't need any other strategy, actually. If you just follow risk management, it's one of the most important things in trading. And this -4% loss, you don't worry about it. Since the strategy has a 60% win rate, you guys are going to basically get 4% extra at some point, and it basically cancels out, right? So don't worry about it. Make sure you focus on this. And don't worry if this feels like a lot. I'll summarize everything at the end, right? And I'm sure the video is long right now. So if you guys have stuck till here, I'm sure you're interested in this strategy and want to make money. So congrats. Yes, now moving on to the final part, psychology, right? So many people see psychology as many different things. What I see psychology is basically 2 things. Your psychology should work for you, right? So it should basically assist you in your analysis and help you in your risk management. How do we do this? We have certain tools like stop loss or trailing stop loss, which would help us in our risk management. So the 2% loss, we can just use a stop loss, right? Or we can maybe trail it if it comes to like based on your reasons, you can always trail it. But what the most important thing is, use these tools which is given to us. I actually created an algo system which helps me trail my stop loss and stop loss, because I don't want to really use my emotions or brain during the trade, because human emotions are not reliable, right? So I just left it to the algo. So that's my scene for risk management. For the analysis part, here's where like people go wrong, I feel, right? People see the same chart like 20 times and expect that something's going to change. No, things are going to change. I want you guys, when we reach to the psychology part, not during the analysis part, when we reach to the psychology part, I want you guys to see other data points, like, for example, option data, global markets, what else? Maybe PCR sometimes. Um, so stuff like this, right? Don't keep seeing the chart patterns. Use all these other data points in to basically assist you with your analysis. So you already made a view. It's just keeping your brain steady, saying that, okay, my view is right, or basically something like that, right? It's not going to help you in any way, but it's just going to calm you down, right? So all this is basically psychology. So I think I basically covered everything. Um, I hope you guys enjoyed the video. I'll just quickly maybe go through every point again. So what we're going to do is we're going to trade in Bank Nifty, right? Um, and our goal is to get 50% or more of our capital, right? So this is our goal. So let's go to the analysis. The first thing is the entry. It's going to be on a Monday after 12 o'clock so that we see the initial price action and take decisions based on that, based on our levels. So after 12 o'clock. Tuesday, it could be any time of the day based on your levels. And Wednesday before 12, right? We go to the 1 day time frame. So I'll just go quickly back. So what we do is we go 3 Fridays back uh, and see the trend of the market um, on the daily time frame. We go to the 1 hour time frame and draw levels, and we use that levels for the entire time of our trade, right? Yeah. So the analysis part is done, and we don't see this anymore. Risk management. We don't lose more than 2 per. So between that is our strategy. Obviously, the strategy is so since I gave an example of bearish, I'll give an example of bullish so that you guys are clear on both the sides, right? So what if I say that the market is bullish and it won't go below 41,500, right? So as I said, 41,500, right? So what we are going to do is we're going to short 41,500 PE, right? The opposite. And we're going to buy 300 to 500 points out of the money. So 41,800, right? Right. Sorry. 41,500 is, where's 41,500? So let's go like 500 points. So it'll be 41,000, right? PE. So this is an example for bullish, just in case your view is bullish. So this is an example for bullish, and I gave an example already for bearish. So that's the strategy, right? And all this can be done in 30K. So just keep 30 to 50K or max. Even so, what I do it with approximately a lakh. So you guys can do it with like 30 to a lakh, basically, or more than that. Yeah. So the other point is in risk management. Um, I'm not going to lose more than 2% of my capital. And if I win, I'm going to win 4% of my capital, right? So win, lose. The next thing is if I win 2 trading sessions, I'm at a 8% gain on my capital. If I lose 1 trading session and win the other 2 trading session, I'm put at a 6% of my capital. If I lose both the trading sessions, I'm put at a minus 4%. Follow this, right? So these 2 points basically for the risk management. Psychology, use a stop loss, use other data points like option data, PCR, global markets, etc. Try to automate this as much as possible because here's where the big money is and your big losses are too. So try to automate. Don't, what I say is I don't rely on myself because my emotions go all everywhere when I take the trade. So try to automate this as much as possible, how much ever you can. So yeah, guys, that's basically the strategy. I hope I didn't miss out on anything. I'll just stop sharing my screen. Okay, guys, I hope you enjoyed the video. If you guys have any questions related to strategy or have any doubts regarding it, you can always ask me about it in the comment section below, or you can just DM me on Instagram. Other than that, I hope you guys like this video. Keep supporting this channel. Thank you so much for your time. I'll see you guys in another video. Also, guys, before closing out, I just want to talk about something. So 50% of your capital might not seem like a lot, right? I have my friend the other day telling that you guys do so much for just 50% of your capital. So I just wanted to talk about this because I'm sure that many of you will have the same doubt. If you go to like well-established company and if you see their returns like annually, it'll be just about 10 to 20%, right? So a well-established company just they're just consistent and they get 10 to 20% of return every single year. We are finding a way to get 50% of our capital, provided we follow the rules and we are consistent. If you go to someone, if you go to a businessman and tell him that, hey, I have a skill which gives me 50% of my capital every year, they'll basically run behind you, right? Because no matter where you are in the world, you can execute this strategy and get 50%. So I just wanted to address this because 50% might look small, but if you're consistent with it, it's going to give you massive returns at the end. Yeah, thank you.